In recent news, Tan Sri Tony Fernandez wants to merge AirAsia and AirAsia X. This has caused investors a lot of excitement and skepticism as well. Now, before we dive into this acquisition, let's take a look at the current backdrop. Now, of course, with the pandemic, an aviation business like AirAsia got hit really hard. As you can see here, sales fell from 11.6 billion in 2019 to 3.3 billion in 2020 and 1.7 billion in 2021. No surprise, in 2020, if you recall, AirAsia hit PN17 status. And then in 2021, the same thing happened to AirAsia X. If you don't know what PN17 means, well, basically, they are in big financial distress. After that, many things happened. Number one, they decided to change their name from AirAsia to capital A. The reasoning Mr. Tony Fernandez gave was because he wanted to move away from AirAsia being an aviation business and into a more tech sort of business. Although some people say it's really just to escape the PN17 stigma. Now in 2023, the PN17 status was lifted for AirAsia X, but as of this recording, AirAsia is still in PN17 status. Now guys, for jokes, if you recall, during this period as well, Tan Sri Tony was lambasted for going shirtless and getting a massage. Now comes the big news, which is the injection or acquisition. Now what exactly is happening? Long story short, Tan Sri Tony wants to combine all the fleets from AirAsia and AirAsia X together under one entity. This will be looking a bit more like the IAG group or International Airlines Group, which sort of combines different airlines with different economic models under one umbrella. Now, if you didn't know why this is an interesting move, is because AirAsia and AirAsia X, although they sound the same, really have quite different business models. For one, AirAsia is short haul, and usually short haul is defined by any flights that is below 4 hours. And AirAsia X is long haul, anything more than 4 hours. The economics and the profitability for both of these business model is quite different. Typically, the short haul flights are a lot more profitable than the long haul ones. So to give you a bit more detail, capital A, where AirAsia is located, they're trying to divest AirAsia or the short haul airline into AAX in a 6.8 billion ringgit deal. Roughly, once this is done, or if this is done, the combined fleet size will be around 249 aircrafts this year, and they're projected to fly 76.6 million passengers. Now, of course, you might be asking, why in the world is Tan Sri Tony doing something like that? Number one, hopefully this merger/acquisition/injection will help them with uplifting the PN17 status, especially for AirAsia, as currently capital A's equity is negative. Now, as for the second reason, let me quote directly from Tan Sri Tony himself. With the advent of these longer flight narrow-body aircrafts, the advent of technology, we are able to put this 1+1 airline and make it 5 hours. In other words, modern technology is sort of breaking down that definition of short haul and long haul and kind of making it similar. At least this is according to them. Now, if all this is a little bit more confusing and need a little bit more details, you can pause the video right now to see this structure, this beautiful structure, corporate structure that the Edge came up with. Now, as usual, this merger or acquisition has a lot of supporters and detractors, bulls and bears. So let's start with what the bulls are thinking. Now, of course, the first and more obvious thing that you and I can immediately grasp is that global travel is recovering. In fact, it's close to pre-pandemic levels. And as you can see here, something similar is happening with ASEAN, although it slowed down a bit, but we can confidently predict that it's going to be back. Now, why is this important? Because all of this will translate into improved finances and profits for AirAsia and AirAsia X. Now, as you can see here, according to Maybank analyst, he or she believes that the earnings per share when these two entities combined can go from 0.19 per share in 2024 to 0.3 in 2026. Spare you the math, is basically a 50% increase, which is, seems very exciting on the surface. Another added benefit of this divestiture is that the non-aviation businesses like Santan, BigPay, and all the technology stuff will now be more standalone. And they will not be there to so-called confuse or annoy investors who just want to invest pure play aviation investments. Now, how about the skeptics of these deals? What are the bears saying? For one, mixing AirAsia and AirAsia X is also going to form its own murkiness when it comes to investability. Short-haul flights are still on average more profitable than long-haul flights because of the economics. The analogy I would use is a bit like chocolate and raisins. If you add raisins to chocolates, it's still going to taste okay. But chocolate alone probably tastes better than with raisins. But let me know in the comments, do you like raisins with your chocolates? And when you can compare these two graphs or images here, you can see that the RAS and CAS differential for AirAsia is a lot better than AirAsia X. So when you mix it together, there's probably some sort of midpoint. Now, number two, which is the technology part, the super app or the online travel agency dream that Tan Sri Tony has, is still quite far away from something like a Grab, right, which is some sort of reference point for the super app. Grab has a slightly more proven business model, but even then, they're still bleeding money every single year. And the thing is, to build an app that is super expensive. Since the beginning, Grab has raised roughly $16 billion according to Crunchbase. And of course, the big question is, will Capital A be needing to do the same to just catch up, let alone surpass Grab? It also probably explains why Tan Sri Tony wants to fundraise in NASDAQ for the super app, Capital A. And as you can see here, although the revenue has grown somewhat, it's still a lot smaller than the aviation business. Now, the third reason, which is linked to the second reason, is that potentially because of the amount of capital required to build a super app, AiraSia X will need to do the funding and the heavy lifting. And the question obviously is, will they be able to do it? Now, let's say we take the approximate average dividend payout of AiraSia from 2012 to 2019, you're looking at 277 million per year, excluding special dividends. Now, this is still, even if you combine all that 7-8 years, it's still quite a bit less than the $16 billion that Grab raised. Now, all of this actually assumes that the dividends come from AiraSia. What if AiraSia X actually drags the earnings down and that hampers the dividend payment? As you can see here, right, pre-2020, AiraSia's profits are actually quite choppy. Now comes my conclusion. What do I think about all of this? On one hand, Tan Sri Tony really has a uphill task. Trying to get the aviation business arm back to pre-pandemic profitability is already a challenge in and of itself, although it's a lot more realistic. For the super app, it's going to be way harder. However, with the amount of data that they collect from their aviation customers, they have the raw materials to succeed. In this case, the raw data. Although things look quite tough for Tan Sri Tony, you never want to bet against him. You have to remember that he turned $1 and a little bit of that into a $1 billion business. But guys, what do you think? I want to know your thoughts. Let me know in the comments. And thank you for watching the video.